Hey everybody, I'm going to do something a little bit different today. I think it was a couple months ago I took some time to talk about GTI. Today I'm going to talk about Canopy Growth. If you don't know me, I'm Alan Brochstein from 420 Investor, and I've been following Canopy Growth since literally day one, back in 2013. And this week we've seen a couple of analysts downgrade the stock, and a lot of investors are probably really wondering what's going on. Could these analysts be right? And I'll just jump to the conclusion, yes, they're right. This is not anything new at all, to me at least, or to my subscribers. I kind of joke about it, but it is true. I've lost several subscribers over the years over my negative views on Canopy Growth. And it's been a very disappointing story, not just in the stock price, of course, but fundamentally the way things have played out. And if you're not following very closely, there's been some big news recently. So first of all, they had done this acquisition of buying a German pharmaceutical company. That deal closed in 2019, and last week they announced that they're selling it at basically half the price that they paid. Best case, and there's an earnout in there. So best case, I think they get 52 cents on the dollar. They disclose the revenue each quarter from this unit, and they'd expected a lot of growth, and in fact, it hasn't grown for whatever reason. And so what's negative about this is it reflects poorly on old decisions. Okay, well, we don't care about that, but it also takes away a good 50 million of revenue a year. We do care about that. So let me show you what's happened this week. And I don't know that or the other piece of news that we saw recently, which was the CFO. He's a Constellation guy, Mike Lee. He was one of the principal architects of the deal. And he came in ahead of Bruce Linton being canned and has been in that role of CFO since. And he's gone, or he will be gone. They announced his departure along with another executive. So it's really a concerning situation there. The CEO remains, but what has David Klein done since he's been there? It's not really clear. So I wanted to show you what's happened this week. So what we're looking at right now is the forum that I maintain for Canopy Growth. And I didn't get the report, but we started off on Monday with Piper downgrading the stock to a target of 7. I believe that's 7 US. And so he was previously neutral, really slashed his target. And I'm thinking to myself, wow, what a boneheaded time to do this. But it was followed by yet another analyst at Bank of America, and she cut her rating, not her rating, but her target from, and you can see it here, from 19 to 10 Canadian, or that's about 15 to about 8. So the other thing you can see in this report that's interesting is they cut the revenue outlook for 2023 from 722 million to 659. That may reflect, it doesn't say here, but it may reflect the German situation, right, where they're exiting that business. So I'm not even sure that the report does that. So this morning, I shared some thoughts with my subscribers. And so before they reported last time, I had suggested that very generously that perhaps in March the stock could be worth about 15, which I think is about where it was trading. And so, of course, that's not a good investment to own a stock today that in 4 or 5 months, they reported in early November, that would be trading at about the same price, 4.5 months later, whatever that is. And but I was being very generous, I said at the time, and so I've reduced my own multiple of sales that I'm using. You can't do anything for EBITDA, and I'll show you that in just a minute. But I reduced this to 6 times, which I think is still being generous based on the business. And unfortunately, what's happened is the consensus for 2023 sales has really come down a lot after that last report, and now presumably after the divestiture of the German operation. So you do the math, I'm coming up with a $7 target myself, US. So, about half of what it was before. And so a little, it's partially because I'm reducing the valuation from 8 times to 6 times. And the other part is because the sales have come down so far. So I subscribe to this thing called Centio. And so you can see here, I'll show you a different perspective in just a moment, but the stock is trading at, right now, at 8 times 2022 sales and 6 times 2023 sales right now. And that's pretty high. If you look at the MSOs, they're trading below that. And, there's a trade-off. They're federally illegal and they pay high taxes. But at the same time, they have high revenue that's growing, and they're profitable on an operating basis. So there is the tax situation. But if you think about Canopy Growth's future growth, it's going to come from the United States, right? So they're all going to be in the same market. So you're paying a really high price for Canopy Growth right now. So the other way to look at this is on the income statement. This is what I wanted to share, and then I'll get back to my discussion. Just starting up at the top, this is not very exciting revenue growth that's projected for the next few years. Now, I'm going to slide this just slightly so you can see. And there aren't a lot of analysts providing. There's just one analyst providing 2025. So it's really, I wouldn't pay that much attention, but 2024 is really calendar year end 2023. And a year from now, I think that's what people will be looking at roughly. And so the stock's going to have Canadian 898 million of revenue is what the analysts think right now. And, think about all the U.S. companies that are already above $1 billion. I mean, these guys were supposed to be the king of cannabis. And the way it's looking right now, they're not going to be at $1 billion Canadian, much less U.S., right? And more importantly, if you go down and look at adjusted EBITDA, the management was recently telling us they were going to get positive in fiscal 2023, and then they walked away from that, and the analysts don't have them getting positive even in fiscal 2024, which is almost calendar 2023. So where does that leave investors right now? So I think this is a very tough situation. One of the things that I had projected is that their net cash is going to be negative. They have a lot of debt, and especially considering they have no EBITDA, it's a lot of debt. Their cash balance is dwindling. They just spent $425 million to pay for 85% of Wana Brands, but they may lose all that money. If they're never able to keep their listing in the U.S., they will lose that money. And so their hands are tied right now, big time. And I'm going to tell you what I think might happen. So some people might speculate that Constellation would just buy them in. Not at this price, I don't think. Why? There's no reason to do that. And Constellation doesn't have the financial capacity, in my opinion, to really do that. I'm on the record as talking about how Altria might buy Kronos. They have the financial capacity to do that. It's a deal that makes sense. For Constellation, I don't think it makes a lot of sense. So we're sitting here looking at a company that really doesn't have a lot going on for it right now, and that really doesn't exhibit much leadership anywhere. They were supposed to be the world's leading cannabis company, but there's literally almost nowhere that they show leadership. And their parent or their strategic investor is not really in a position to bail them out. So when I think about what might happen going forward, a couple of things. Number one, expect for them to retrench a little bit more in Canada in the sense of shutting down some more capacity and writing down some inventory. And this is going to hurt their balance sheet even more. Number two, I think the crown jewel of the company right now is their stores in Bickle unit. That was the one good acquisition from my perspective that they've done. There's considerable revenue there. they may have to sell that just to keep this thing afloat. So that's something to look for, I believe, next year. Uh, so the other thing that could be interesting, their stock is still very expensive. This week, Organogram, which I think is a reasonably valued stock, uh, announced a deal where they're buying a private LP, and it's a deal that where they'll be acquiring a company that's actually EBITDA positive. Organogram's not EBITDA positive. They're close, but they're not there. And they should get there by year end on their own, but this really helps to get them there. And so we've already seen Canopy Growth recently acquire Supreme. I don't know if there's more deals for them to do, but we might see that too. So the two things I expect to see next year would be potentially, well, three things. One, more write-downs. Two, potentially selling stores in Bickle to give them some solvency. I mean, literally, not they don't have a gun at their head right this minute because the debt on their balance sheet isn't due. I think 2023. So there's no urgency necessarily. Number three, I think I might have gone out of order. So we could see them. So the write downs I mentioned, sell stores in Bickle, and maybe do some M&A more M&A in Canada to the extent they can consolidate by buying a profitable small LP. I don't think that's really going to solve their problems. So what I really wanted to say was, a lot of times people laugh at these analysts, and I'm laughing at their timing because I've been negative on Canopy Growth for a long time. And believe me, I felt like a jackass in February when the stock was way up there, and these people that were most of them formerly subscribers of 420 Investor were telling me how stupid I was for my negative views on the company. Yet here we are as 2021 comes to an end, and I think the outlook here is dire. In fact, I just shared with you that in my own 3.5 month target is just $7, and so that's below where we're trading. Now, I want to be really clear. A valuation target isn't necessarily the right way to bet on where a stock's going to be. I mean, this stock. I mean, let's just walk it back a second. I had a very low valuation target earlier this year, and the stock went into the 50s. So I'm not necessarily predicting that's where it goes. I'm just really trying to explain to you, as I've been explaining to my subscribers for a long time, why I'm not touching this stock. There are so many better options in the cannabis space, whether you want to look at large LPs like Canopy Growth. I would point people towards Kronos, as I've done publicly, or whether you want to look at smaller LPs. You'll have to subscribe to 420 Investor to find out what I'm thinking there. I just actually wrote about several of them this weekend. And then certainly, I think it continues to be the case that there are, south of the border, there are a lot more attractive options than Canopy Growth. So if you're kind of scratching your head about why these analysts are coming out with sub $10 targets on Canopy Growth, this is why. And I really wanted to take the time to explain that. And if you're looking for smarter stocks or smarter investments, I should say, than Canopy Growth, feel free to subscribe to 420 Investor. I think I can steer you in the right direction. Take care.